This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Crude prices fell on Thursday as the United States and its allies discussed a possible further coordinated release of oil from storage to help calm energy markets in the wake of Russia's invasion of Ukraine. Benchmark Brent fell by $1.99, or 1.6% to $119.61 a barrel by 14:03 GMT. U.S. West Texas Intermediate, WTI, was down $2.10, or 1.8%, at $112.82 a barrel. With respect to the emergency stockpiles, these are ongoing discussions and all those tools are certainly on the table, U.S. Energy Secretary Jennifer Granholm said at a news conference at the headquarters of the International Energy Agency in Paris.
German utilities on Thursday said their country needed an early warning system to tackle gas shortages, a day after Russia ordered the switch of contract payments to rubles, potentially squeezing supplies and puzzling buyers over the consequences. President Vladimir Putin's ruble payment demand added to market nervousness and calls into question Russia's historic claim it is a reliable gas supplier regardless of geopolitics. For more than 50 years, Moscow has ensured supply to Germany, even during the Cold War, and its main gas exporter Gazprom has more than 40 long-term gas agreements with European counterparties.
Moving on to the top news in the energy sector.
U.S. crude in the Strategic Petroleum Reserve, SPR, fell by 4.2 million barrels last week to 571.3 million barrels, its lowest since May 2002, the U.S. Energy Information Administration, EIA, said in its weekly petroleum status report on Wednesday. That was the biggest weekly decline in SPR since August 2011, EIA said. U.S. distillate stockpiles fell to 112.1 million barrels last week, their lowest since April 2014, EIA said. On the U.S. East Coast, distillate inventories fell to 28.5 million barrels, their lowest last week since March 2015, EIA said.
EU leaders are expected to agree at a two-day summit starting on Thursday to jointly buy gas, as they seek to cut reliance on Russian fuels and build a buffer against supply shocks. But the bloc remains unlikely to sanction Russian oil and gas. The invasion of Ukraine by Russia, Europe's top gas supplier, pushed already high energy prices to records and has prompted the European Union to attempt to slash reliance on Russian fossil fuels by hiking imports from other countries and quickly expanding renewable energy. In a draft to their summit conclusions seen by Reuters, the leaders will agree to work together on the joint purchase of gas, LNG and hydrogen, ahead of next winter, and coordinate measures to fill gas storage. Next, we have the top news in metal markets. Russia might look to its giant neighbor to replace Australian alumina supplies cut off by sanctions, but Chinese aluminium smelters need all the feedstock they can get and may be worried about secondary sanctions from the West, industry analysts say. Australia on Sunday imposed an immediate ban on exports to Russia of alumina and aluminium ores, including bauxite, in response to Moscow's invasion of Ukraine. The move squeezes Russian aluminium giant Rusal, the world's number 2 producer outside China. It gets about 19% of its alumina from Australia's Queensland Aluminium, QAL, in which it holds a 20% stake.
Nickel prices lurched higher to hit the daily limits in London and China on Thursday, with the large moves fueled by thin trading conditions. Industrial metals have rallied as disruptions from the Russia-Ukraine conflict and higher energy costs triggered concerns over global supply. Efforts by major Chinese nickel producer Tsingshan Holding Group to reduce its short positions spurred LME nickel prices to rocket to record highs above $100,000 a ton on March 8, after which trading was suspended for 6 sessions.
We will now look at the top news in the agricultural sector.
Russia's agriculture ministry has simplified procedures for obtaining permits for white sugar imports after a jump in domestic demand, it said in a statement on Thursday. Many Russians have rushed to buy sugar and other staples after Western sanctions imposed on Russia for what Moscow calls a special military operation in Ukraine sent food prices higher in March. The authorities have repeatedly told people there is no need to stockpile food products. The Agriculture Ministry will require fewer documents from companies willing to import white sugar to Russia, it said on Thursday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.